Hello friends, if you receive the state pension or you are about to reach state pension age, this affects your money directly, so stay with me here. Right now, there is a number sitting in HMRC's system that decides whether you keep your full winter fuel payment or whether it gets quietly taken back from you later through your tax code. Most pensioners have no idea this number exists, and that is exactly how people end up losing money they assumed was theirs to keep. If your income is anywhere near £35,000 a year, what you do in the next few months decides whether that payment stays in your pocket or gets clawed back without warning. And separately, if you have never checked whether you qualify for pension credit, you may be walking past money you are already entitled to every single week, simply because nobody ever told you the real threshold. This is not a small detail buried somewhere in the small print. This is the difference between keeping money that is rightfully yours and watching it disappear back out of your account next year because you did not check one number in time. Here is exactly who this affects. Anyone receiving the state pension. Anyone with a private pension, a workplace pension, or savings income on top of the state pension. Anyone who assumed the rules still work the way they did 2 years ago. If that is you, stay until the end, because the order we are covering this in matters. The biggest risk is not the one most videos lead, with it comes later. And missing it is the single most common and most costly mistake pensioners are making right now. By the time we get there, you will understand exactly why so many people only find out after the money is already gone. Quick note, everything here comes straight from the official gov.uk website, HMRC. The Department for Work and Pensions and Ofgem named as we go, and it's educational. Not personal advice, so check your own record for your specific numbers. Now let us protect what is yours. 5 things counted down. Building toward the one that actually costs people the most money if they get it wrong. If rules like this matter to you, subscribing means you see it the moment something changes again. Because these thresholds move every single year and nobody sends you a personal reminder. Quick question before we start. Do you actually know right now whether you are on a fixed energy tariff or a standard variable tariff? Drop it in the comments. The number of people who genuinely do not know is higher than you would think, and not knowing is exactly how money quietly slips away. Number 5, Ofgem, the energy regulator, raised the price cap by 13% on the 1st of July, taking the typical household bill from £1,641 to £1,862 a year. If you are on a standard variable tariff, that increase is already sitting on your bill, whether you noticed it or not. About 40% of households are protected because they are on fixed tariffs. The other 60% are exposed, and the next price cap update, covering October through December, gets published by Ofgem on the 26th of August. Here is the part that costs people money every single year. The best fixed deals appear in the weeks right after that announcement, and they get taken first. Wait until October when your bill jumps and you are competing with everyone else who panicked at the same time. So quick question, do you actually know which tariff you are on? If you are not sure, pull up a recent bill today, not in October. Number 4, this one is free and the risk here is simply not knowing it exists. The cold weather payment pays £25 for every 7-day period, where the average temperature in your area is 0 degrees or below. Between November and March, there is no limit on how many times it can pay out in one winter if the weather stays bad. It is paid automatically if you are already receiving pension credit, certain universal credit elements, or a handful of other qualifying benefits. The risk is not that you will be denied it. The risk is that you are not on the underlying benefit that triggers it at all, which means you lose access to it without ever knowing it was there. There is no application form to fill in and no separate phone call to make, which is exactly why it gets overlooked. People assume something this useful must require paperwork, so they never check whether they are already covered. Let me tell you about Joan. This is an illustrative example, not a specific real case. But it is the kind of situation that shows up again and again in comment sections under videos like this one. Joan is 69, retired from a shop job in Yorkshire, lives alone, and very nearly missed out on money for years. She assumed her small workplace pension put her over the limit for pension credit, so she never checked. It did not. The moment she actually applied, she did not just gain her own pension credit. She also unlocked the cold weather payment automatically, a council tax reduction she did not know existed, and help with NHS costs. None of that required a single extra application once the pension credit claim went through. The only thing standing between Joan and years of unclaimed money was one phone call she kept putting off. Number 3, and this is where real money is sitting on the table for a huge number of people right now. Pension credit tops up your income to £238 a week if you are single, or £363 and 25 pence a week as a couple. For the 2026 to 2027 year, those numbers rise slightly every April, which means if you checked last year and were told no, that no may no longer be correct. Pause this and write those two numbers down if they are anywhere close to your own income. According to the Department for Work and Pensions, a large number of pensioners who qualify are still not claiming it. And every week that goes by without applying is a week of money that cannot be backdated indefinitely. Savings under £10,000 do not count against you at all, and even above that, the effect is small. The only way to know for certain whether you are one of the people losing out is to actually check the number, not assume. There is a number coming up that surprises almost everyone. And getting it wrong is the most expensive mistake on this entire list. Number 2. Here is what is actually true right now, according to the official UK government website and HMRC, and here is exactly where people lose money without realizing it. Since winter 2025-2026, the winter fuel payment of £200 or £300 goes automatically to every household of state pension age. You do not need to be on pension credit to get it. That part is good news. But here is the part that catches people out. £35,000 a year, individual income, not household income, is the line that decides whether you keep that payment or whether HMRC takes it back later through your tax code or your self-assessment return. If you live with a partner, you are each assessed separately on your own income. So one of you can be above the line while the other stays comfortably below it. The danger is not the payment itself, the payment arrives either way. The danger is being above that threshold and not realizing it. So the clawback shows up months later as a tax code change you were not expecting and cannot explain. If your income is genuinely close to that line, check the calculator on the official gov.uk website now, while you still have time to plan for it, rather than finding out from a letter. You can also choose to opt out in advance if you would rather not deal with the clawback at all, through the official gov.uk website, or by contacting the Winter Fuel Payment Center directly. And it is reversible if your circumstances change next year. Knowing this number today is the difference between planning for it and being blindsided by it. And number 1. There is a government review into personal independence payment expected at some point this year, looking at how assessments work and whether the criteria should change. I want to be straightforward with you here. The details are not fully settled yet, so rather than guess at specifics, the honest thing to say is this. If you are a current PIP claimant, the real risk is letting your medical evidence and documentation go out of date while you wait to see what happens. A claim with current thorough documentation is simply in a stronger position whenever a review does land, regardless of what it eventually recommends. Waiting until the review is published to start updating your records is waiting until it may already be too late to do it properly. So here is the one thing worth protecting above everything else. Most of you do not need to apply for the winter fuel payment, it comes automatically. But the £35,000 threshold is the one number that decides whether you keep it. And pension credit is sitting there unclaimed for a huge number of people who assumed, wrongly, that they did not qualify. The cost of not checking these two things is not abstract, it is real money. Either money clawed back that you did not plan for, or money you were always entitled to and simply never asked for. Quickly in order, so you remember what to actually do. Number 5, check your energy tariff today. The best fixed deals disappear fast after the August announcement. Number 4, know that the cold weather payment only reaches you if you are already on a qualifying benefit. Number 3, check pension credit, even if you were told no last year, because the threshold moved and you may not have. Number 2, the one that costs the most if you miss it. Check your income against the £35,000 threshold. Now, before the clawback becomes a surprise on your tax code. Number 1. Keep your PIP documentation current regardless of when the review lands. 3 things to actually do this week in order of how much money is at stake. 1. If your income is anywhere near £35,000, check the calculator on the official gov.uk website now. This is the one that protects the most money. 2. Run your numbers through the pension credit calculator on the official gov.uk website, even if you think you will not qualify because the threshold has moved. 3. Check which energy tariff you are on before the August price cap announcement. If you want a second opinion on your specific situation, a licensed advisor can look at the full picture with you. If you know someone on the state pension who has been confused by conflicting videos out there, or who has never checked whether they qualify for pension credit, send them this one. It might be the difference between them losing money quietly and keeping what is actually theirs. The moment that PIP review is actually published, we will break down exactly what changed and what to do about it. Subscribe so you do not miss it. I will see you in the next one.